This is The Markets. I'm Mike Washington. Today is Thursday, February 19th, and I'm on the Goldman Sachs equity trading floor, joined by my colleague, Pete Callahan. Pete is our U.S. technology, media, and telecommunications sector specialist in global banking and markets. Pete, thanks for joining me.
Glad to be here.
If I think about 2026 and conversations both personally and professionally, AI advancements are front and center anywhere you look. Yet, when I look at equity markets, tech specifically, it's been a big underperformer year to date. What do you make of that, and what's been standing out to you?
Yeah, it's a good question. You wouldn't know it from looking at the media and the press that tech's been under pressure this year, just given all the excitement around generative AI. But it has been, right? The tech sector down about 3 or 4% this year has lagged the market by a fair bit. And I think what's going on this year has been a lot about rotations, right? So you've had this broadening out dynamic in the market that lots of investors have talked about. A lot of that's tied to a shifting or frankly, more constructive view on the US economy in 2026. But you've also had this transition, I think, in the AI story from, the last 3 years are really about the build cycle. You heard a lot about picks and shovels. This year has been a lot more about the implementation side of AI, and the market's starting to get a little bit more focused on that, both on the positive side and on the potential negative side. And so you've seen this kind of rotation into either more defensive or physical assets in the market in calendar 26 as investors start to think about where and how AI is deployed across enterprises in the consumer layer.
If we shift more away from the narrative, for instance, into fundamentals, we're through 2Q earnings period. What has stood out to you about earnings, and are fundamentals telling you something that maybe the narrative is not?
Yeah, you're right, Mike. So the fundamental story in tech, if we just looked at Q4 earnings season and how companies are sounding to start 2026, it's good, right? You look at comm services, you look at infotech, the subsector, you look at Mag 7, this is still getting best-in-class earnings growth and revenue growth relative to the rest of the market. And so I think what was interesting to watch play out over the last several weeks was largely solid earnings, some of the highest beat percent rates in the market, but price action has been soggy. And of course, equities are forward-looking instruments, and the market's still wrestling with this give and pull of, yes, things are good today, but how do I think about the future? Do I have more or less visibility than I used to, given the rise of generative AI?
Yeah, when you mentioned Mag 7, right, and you think about the robust earnings growth that we've seen time and time again, year over year, within that cohort. Capex, I know numbers have been walked up. Do you feel that Capex has weighed on that sector, that particular pocket of the market, that much to where the investment thesis has changed? Because if I look across the board, every single Mag 7 stock, I think it's down year to date as of this
No, that's
report.
right, and it's not something we're used to seeing, so you're right. Kind of what's going on there. I do think there was just an expectations reset to the upside over Q4 earnings around Capex and capital intensity in calendar 26. Does that make it a thesis changer to your question? I'm not sure it's a thesis changer. I think what it does is it just raises the stakes to some degree, right? Now, when you're investing this much and you're absorbing that cost, it really puts pressure to deliver revenues and product over the next 6, 12, and 24 months. And I think that's what the market is digesting right now. We took a lot of that upfront cost back into models, and we heard that from these companies. Now it's about delivering on the top line over the next 6 to 12 months, and the market's just being a little bit more judicial there.
Your most asked question this year has to be, what the heck is going on with software?
Yeah.
Walk us through that story.
Yeah, Mike, listen, I think it's been well litigated. I think the sector's down 30% this year. A lot of ink spilled on kind of what's going on as the market absorbs, again, some of this uncertainty that is arising from generative AI in the future years. Where I think we're at now, again, we've had a huge pullback in the space. I think we're starting to move to a point now as you kind of get through earnings season, you get into conference season, that type of dialogue in the market, and it's about dispersion, right? Can you find opportunities? Because you've had kind of a high correlation sell-off where everything has kind of come down roughly the same amount at the same time, regardless of earnings, regardless of multiple, regardless of starting point. And now I think we're at the point now where investors are going to try to be a little bit more judicial about dispersion. That's my guess is going to be the story from here. If we do this again in 3 to 6 months, we'll probably be talking a lot more about dispersion than we will be a sector-driven move.
Yeah, I think there's a lot under the hood within software that really stands out.
Yeah.
If we think about the software trade, you're selling software, and the money has been rotating into semis.
That's right.
Where are your conversations within that semis over software trade, and like what inning are we in it?
Yeah, the inning question's tough. I think where investors look at it right now is they say that direction kind of makes sense to me. But now, again, you got to be a lot more thoughtful and tactical about it from here, right? You've had this really big spread open up. Most investors, from those levels, you're like, is it likely to keep going? Am I likely to see reversion? Is sort of that spread going to stay here? Now, again, it's just about the individual stocks within it and trying to pick from there. And so I think the direction I think investors will look back and say, okay, we could kind of see how that made sense, particularly given starting places and direction of travel for certain subsectors and magnitudes of revisions. But again, this is all now much more about a nuanced conversation from here.
Where is this AI conversation going? Where do you feel like the misconceptions are right now?
This is I thought about this question. It's a tough one to answer. And I think the way I've thought about generative AI over the last several years since this cycle's taken off has been a few things, which is one, this is a decade-long journey, if not longer. I find the pendulum swings back and forth where investors are, run to one extreme and then to another. And it's very, candidly hard to hold views and truths too closely right now because things are changing quickly. The technology is rapidly evolving. And I think if the market or investors look back and said, what do we believe 3 months ago and 6 months ago and 12 months ago, those narratives are very different today. So in some way, you almost have to be extra open-minded about change and the velocity of that change perhaps accelerating. And that can obviously be a good thing or a bad thing depending on where you sit. But I would always just be a little bit more open-minded than the market is about where narratives may go over the next 3, 6, 9, and 12 months.
So if you wrap it up in a bow for us, what's the trade right now?
Yeah, Mike, we just talked about AI being very exciting. We talked about earnings growth being very good for the sector. Valuation and starting place has gotten a little bit cleaner. I looked this morning, I think the NASDAQ's lagged the Russell by almost 8 or 9 points to start the year. It is the slowest start on a relative basis we've seen in the last 15 years, matching 2021. And so put me on the side of the bull camp for tech from here.
What if you were to narrow it down into some subsectors of tech? What stands out?
Yeah, Mike, I'm looking at the large cap tech stocks again. They're down, again, anywhere between 5 to 10% to start the year. The earnings profile has been good. We got a lot of the upfront cost associated with these storylines over the last earnings season. And so look for better execution and revenue growth in the months ahead.
Awesome. What are you going to be looking at next week?
Unfortunately, there's a lot, right? We're going to get a bunch of earnings from software and semiconductor companies. We start to move into conference season after that. There's obviously a lot of macro and geopolitical storylines to keep track of. So it doesn't feel like it's going to slow down anytime soon.
Totally agree. Pete, this has been awesome. We always appreciate your insights.
Thanks, Mike.
And that does it for this week's episode of The Markets. I'm Mike Washington. Thanks for listening.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Copyright 2026 Goldman Sachs, all rights reserved.